Look at your watch. No, don't guess. Look at it. What time is it? 8 p.m. Eastern Time. 90 minutes ago, the New York Mercantile Exchange went dark. The COMEX is silent. Algorithms on standby. Up on the 32nd floor at JP Morgan Chase, the ties are loosened. The second glass of scotch is already poured, and in their minds there's time. 48 hours to solve a problem that doesn't have a solution. Millions of ounces of physical silver that don't exist. They think tonight is quiet. They think the market is asleep. They think nothing happens when America sleeps. And that assumption, that quiet, confident Western assumption, is about to become the most expensive mistake in modern commodity market history. Because I'm staring at the screen right now, and you need to understand what I'm seeing. It's 8 p.m. in New York, but it's also 8 a.m. in Beijing, 8 a.m. in Shanghai. The sun is rising over the Huangpu River, and inside the Shanghai Gold Exchange, the machines are turning on. Right now, as I speak, there are traders in Lujiazui already at their desks who have been waiting for this moment for weeks. They saw it. They watched silver tear through $73, like a bullet through wet paper. No hesitation, no resistance, just velocity. They watched the gamma squeeze ignite across the entire options chain, and while the screens flashed green, they smiled. Because they understand something the geniuses at Goldman Sachs, Citibank, and Bank of America seem to have forgotten. Wall Street is trapped, not emotionally, mathematically. The options market has already written the ending. Every institution that sold naked calls above $70, they didn't just take risk, they signed a death warrant. And now, this session, this exact window, the one unfolding right now as you're watching this, is the weakest point in the entire global trading cycle. Low liquidity, thin books, maximum exposure. This is the kill zone. Welcome to what I call the Beijing death blow. And if you don't understand what's about to unfold in the next 12 hours, you're going to wake up tomorrow morning, see silver trading at $80, and wonder why your financial advisor isn't picking up the phone. So let me walk you through the crime scene. Because that's exactly what this is. I've been in this game for years. I've watched manipulation, fraud, rehypothecation, naked shorting, paper games layered on top of paper games. But I have never, not once, seen a setup this clean, this precise, this surgical. What happened today wasn't random. It was phase one, the opening move of a coordinated cross-continental liquidation event. And phase two. It's already unfolding in Asia while Wall Street sleeps. This is financial warfare, not a metaphor, not exaggeration. A real-time operation across currency and commodity markets. And you're watching it from the front row, because you chose this moment instead of noise. Now, they want me to say this isn't financial advice. Of course it isn't. This is a survival manual for a system already on fire. Do your own research, especially if you still trust the people who erased your purchasing power. I'm not licensed, not registered. Just a man with 6 screens, black coffee, and years of watching overnight order books while the world sleeps. Everything I'm saying comes from public data, historical patterns, and repetition. Ignore that and act blindly. That's on you. But if you listen closely, really closely, you'll understand why the next 12 hours could rewrite the rules of the precious metals market. So before we begin, one thing. The algorithm is burying this. Last week, I broke down COMEX inventory decline 1,400 views on a 200,000 subscriber channel. That's not an accident. So if you're here for the real economy, not the version fed to you on CNBC, hit like. Hard. Break the silence. Because right now that button is the only weapon you've got. We are living through the most important monetary event since the Nixon shock, and you're about to ignore the one channel tracking it in real time. Subscribe. Turn on notifications. Because when I drop the 6 a.m. update before New York opens, you need to see it before your broker does. That's the edge. Now, what actually happened today? Silver opened at $69.42. Already historic. But within 30 minutes, something broke. A gamma reversal. Here's the mechanism. Market makers sold calls above $70 betting price wouldn't get there. But when silver crossed $70, their exposure flipped. From dampening volatility to amplifying it. Every uptick forced them to buy. Buying pushed price higher. Higher price forced more buying, a feedback loop. A chain reaction at 10:14 a.m. Eastern triggered $412 million in call options instantly in the money. That's not theory. That's obligation. Silver didn't stop. $71 and $71.57, then vertical by 1:07 p.m., $73.11. Understand this. The previous high was $49.82 and in 2011. This isn't just a breakout. This is pressure, mathematical pressure, on every short position built over the last decade. COMEX open interest, 147,000 contracts. At 5,000 ounces each, that's 735 million ounces on paper. Now ask yourself, how much of that actually exists? I pulled the numbers straight from the CME Group Warehouse Report, 4:30 p.m. Registered silver, 28.3 million ounces. Paper claims, 735 million. That's 26 to 1. 26 ounces on paper for every 1 ounce that actually exists. Now put that in context. 2008, before Lehman Brothers, leverage was 8:1. That nearly broke the system. 2020 supply chains froze. 12:1 triggered delivery stress. They had to invent new contracts just to survive. 0.1980 Hunt Brothers 15:1. And rules were changed to stop the collapse. Today, 26:1. This is the most fragile structure in modern silver market history, and into that structure a gamma squeeze just detonated. While Wall Street sleeps, I'm watching Asia, watching Shanghai Gold Exchange, because right now they're doing one thing, sweeping the overnight order book. And here's why that matters. Day session, 214,000 contracts. Night session, 15,000 to 25,000. Less than 10% liquidity. So when real size hits this market now, it doesn't get absorbed. It moves price violently. No depth, no cushion, just impact. And what's happening right now is pressure meeting a system that can't handle it. Right now you're watching them buy into a vacuum, and price is reacting exactly how it should, violently. Because that's the game Asia is playing tonight. They've read the same data. They know Western market makers are sitting on hundreds of millions in the money calls, expiring in under 48 hours. And they know something even more important. Those positions must be hedged at the open. So what's the strategy? Push price higher now, when liquidity is thin, when resistance is weakest. Build the problem tonight, so it explodes tomorrow. They're constructing a wall toward $80, layered buying across the Shanghai Gold Exchange and overnight futures. Sweeping liquidity. Pulling offers, creating what I call a liquidity cascade, where removing sellers lifts price with minimal effort. Every ounce they take tonight is one less ounce available tomorrow. Every dollar higher is a direct hit to the balance sheets of JP Chase, HSBC, Citibank. And this isn't theory. We've seen it before, price gaps in Asia. Premiums explode, and by the time New York wakes up the floor has already moved. This is the mechanism. Buy physical, drain supply, force paper to chase reality. And if you think they won't exploit this window, then you haven't been paying attention. Asia drained the liquidity overnight, so when New York wakes up there won't be anything left to buy. No cheap silver, no offers between $80 and $85, just empty space on the order book, and when algorithms hit that vacuum, price doesn't climb, it jumps. 80 VIC, $85, possibly 90 ZIX before Thursday closes. That's not a prediction, that's math. $412 million in calls. Delta 0.75. That forces roughly 3.8 million ounces of hedging demand, in a system holding just 28.3 million ounces registered. One day, 13% of inventory gone, and that doesn't include short covering, retail panic, or continued Asian accumulation. Now add one word to your vocabulary, rehypothecation. 26 claims on 1 ounce. And when everyone shows up to collect, force majeure, cash settlement. And the moment that happens on COMEX, paper price freezes, physical price disconnects permanently. That's the reveal, not collapse, exposure. Because this isn't random. This is strategy. Since 2022, China has been accumulating gold, building alternatives, preparing for a world beyond the dollar. This silver move, it's not just a trade. It's a signal of a system being replaced. This isn't just capital rotation. This is a transfer of power from U.S. treasuries into physical gold and silver, because if you control the metal, you control the collateral, and if you control the collateral, you control the collateral, you control the system. Every ounce moving into the Shanghai Gold Exchange is strengthening the East and weakening the West. This isn't a trade. It's financial warfare. And the U.S., mathematically trapped, $37.8 trillion in debt, $2.1 trillion deficits, $1.2 trillion in interest alone. The system survives because it can print, but that advantage is fading. Now watch the real pressure point, the repo market, the plumbing of the entire financial system. In 2019, the system cracked, rates spiked, liquidity vanished, the Federal Reserve stepped in to stop collapse. Now, rates are rising again, collateral is scarce, banks are hoarding, leverage becomes fragile, especially 26-1 short silver. Here's the chain. Price rises, collateral weakens, margin calls hit. Banks must buy or default. Buy or die. Once it starts, it feeds itself. A meltdown driven by math. And when New York sees $80 silver, that's when it triggers. If you're not subscribed, you're blind. Miss the signal, miss the shift. Buy or die. Once it starts, it feeds itself. A meltdown driven by math. And when New York sees $80 silver, that's when it triggers. If you're not subscribed, you're blind. Miss the signal, miss the shift. This isn't normal. This is coordinated. Eastern capital is exploiting overnight liquidity, buying physical, forcing price beyond Western hedging capacity. 73 doesn't hold. Momentum pushes toward $80 but the flaw is clear. COMEX 28 ounces. Leverage 26-1. The system can't absorb it. Liquidity is tight. The Fed is constrained. Debt is compounding. So what matters? Physical metal, not paper, not promises. Because while Wall Street sleeps, Shanghai is active. Liquidity is vanishing. The trap is set. $78.85 is the zone. This is the transfer. The only question, are you positioned for it?